Good afternoon, ladies and gentlemen, members of the media. The Monetary Policy Committee convened today for its 78th meeting to evaluate recent economic and financial developments, both domestically and internationally, and to determine the appropriate direction for monetary policy. Following extensive deliberations, the 7 members of the committee who were present unanimously decided to increase the policy rate by 25 basis points. In making this decision, the Monetary Policy Committee took into consideration the macroeconomic implications that the recent escalation of geopolitical tensions and the US-Iran conflict have for small and highly open economies such as Mauritius. On the one hand, higher international fuel prices, increased freight and transportation costs, and exchange rate pressures can rapidly transmit to domestic prices through imported inflation channels. On the other, the committee is fully cognizant of the growing uncertainties surrounding the global economic outlook and the related recent moderation in domestic economic activity. Recent data underscores the domestic economy's vulnerability to external shocks. While headline inflation remained unchanged at 4.2% between March and April 2026, year-on-year inflation showed a notable increase to 3.6% in April, from 2.7% in March, primarily driven by rising energy prices and some second-round effects. Additionally, tourist arrivals by air for April declined by 8% year-on-year, attributable to significant reductions in service by a major airline. The perspective on the domestic economy has therefore shifted since the previous MPC meeting in February 2026. Considering the highly uncertain environment, staff have based their growth and inflation projections on a range of scenarios with different oil price paths. Under the baseline scenario that assumes an average oil price of $90 per barrel, the resolution of the conflict and complete reopening of the Strait of Hormuz by the first half of 2026, the end of the first half of 2026, headline inflation is projected to rise to around 5.5% in 2026, well above the previous forecast of 3.6%, and above the upper end of the inflation target range of 2 to 5%. In more adverse scenarios, inflation could rise even higher and remain elevated for longer, with substantially stronger second-round effects. Domestic economic activity is expected to soften this year. Real GDP growth for 2026 is now forecast at 2.8%, whereas the MPC had, in February 2026, considered a projected real GDP growth rate between 3.3 and 3.5%. This downward revision primarily reflects the adverse impact of higher fuel and electricity costs on activity and household purchasing power, as well as a moderation in tourist arrivals. The growth forecast is also subject to downside risks in the event of a protracted conflict. Nevertheless, after carefully weighing the balance of risks, the MPC determined that it is necessary to act in a timely and measured manner to preserve price stability, mitigate the risk of second-round inflationary effects becoming embedded in the economy, and to safeguard macroeconomic stability over the medium term. In reaching its decision today, the MPC thoroughly evaluated the evolving risk from both international and domestic standpoints. The MPC remains firmly committed to the objectives of price stability and orderly and balanced economic development. I will now elaborate on the factors that shaped the MPC's decision during the meeting. Let me start with an overview of recent global economic developments. Recent increases in energy prices have raised inflation worldwide and introduced fresh upside risk to inflation trajectories. In the US, consumer price inflation increased from 3.3% in March 2026 to 3.8% in April, while in the euro area, inflation picked up from 2.6% in March to 3.0% in April. oil market conditions remain highly sensitive to geopolitical developments, and market analysts have warned that a prolonged disruption in the Strait of Hormuz could exert significant upward pressure on global energy prices. Global growth prospects have moderated, with risk tilted to the downside. The IMF, in its World Economic Outlook April 2026 report, projected global growth at 3.1% for 2026 under its reference scenario. This represented a downward revision of 0.2 percentage points compared to the January 2026 WEO update, given the impact of the war on commodity markets, inflation expectations, and financial conditions. Concurrently, global inflation forecasts were revised upward to 4.4% in 2026 from 3.8% projected in January. As the conflict persists and global crude inventories decline, the risk of a sharper price correction, and in some countries, physical supply shortages, is increasing. The longer and larger the inflation shock, the greater the risk of demand destruction. In this context, the IMF warned that under more severe conflict scenarios, growth in 2026 could weaken further, while inflation could rise higher than under its reference scenario. Financial markets have also experienced heightened volatility. Investors have become increasingly cautious amid uncertainty regarding the duration and broader economic implications of the conflict. While equity markets continue to focus on corporate earnings and the AI potential, global bond yields remain elevated. Exchange rate movements across several emerging and small open economies have reflected shifts in global risk sentiment. Most major central banks, including the US Federal Reserve, the European Central Bank, and the Bank of England, have held policy rates unchanged in recent meetings. The conflict has intensified the policy trade-offs faced by central banks, with renewed inflationary pressures amid weakening growth prospects, prompting a more cautious and data-driven approach to interest rate decisions. Markets, on their part, are already pricing in the rising probability of an interest rate increase by the US Fed and a 50 basis points increase by the ECB by the end of 2026. Let me now turn to domestic economic activity. Domestic economic activity remains broadly supported by sustained performance in key sectors. However, amid weaker external demand and heightened global uncertainty, growth is expected to moderate across 2026. War-related pressures could weigh on some sectors, including accommodation and food service activities, manufacturing, agriculture, and construction, mainly through higher costs and supply chain disruptions. The bank has therefore revised its baseline growth forecast down to 2.8% from the 3.3 to 3.5% range presented at the February 2026 MPC meeting. Tourist arrivals increased by 4.0% year-on-year to 464,208 in the first 4 months of 2026, highlighting the sector's resilience to external shocks and its swift adaptation through alternative travel routes to Mauritius. Tourism earnings also rose by 28% year-on-year in the first quarter of 2026 to 30.2 billion rupees. However, the decline of 8% in air arrivals in April, higher airfares, and softer global consumer confidence linked to the Middle East conflict indicate headwinds to the sector going forward, with spillover effects to the broader economy. The unemployment rate fell to a record low of 5.4% in the fourth quarter of 2025, reflecting stronger labor force participation among young people and women. Despite this improvement, nominal wage growth remained moderate, while real wages declined in the last 2 quarters of 2025. Lending to the private sector continued to support economic activity. Private sector credit grew by 11.5% in March 2026, driven by household credit growth of 12.0% and corporate credit growth of 11.1%. Asset quality remains sound, with corporate sector risk subdued and household debt serviceability metrics still above their long-term trends. The latest stress test results also confirm that overall, the banking sector remains sound, liquid, and well capitalized. Domestic inflation has evolved as expected, considering the repercussions of the Middle East crisis. Price hikes in petroleum products, bread, and other products were clearly reflected in the April 2026 year-on-year inflation figure, which increased to 3.6% from 2.7% in March. Price pressures were most evident in key divisions such as transport, restaurants and accommodation services, food and non-alcoholic beverages, and housing, water, electricity, gas, and other fuels. In contrast, headline inflation remained unchanged at 4.2% in April compared to March, due to its 12-month averaging methodology, although it was higher than the 3.7% recorded in December 2025. Core inflation, which indicates underlying price pressures in the economy, remained elevated. On a year-on-year basis, Core 1 and Core 2 inflation rose to 5.5% and 6.1% respectively. Domestically generated inflation, particularly services inflation, continued to contribute substantially to price pressures, although imported inflation, driven by higher energy prices and elevated freight and logistics costs, has strengthened. The bank's inflation expectations survey conducted in March 2026 indicate that near-term inflation expectations have drifted upwards, in line with expectations of higher fuel and other supply costs. However, medium-term inflation expectations have remained broadly anchored within the bank's target range. The outlook for inflation is influenced by fuel price pass-through, persistent core inflation, and geopolitical developments, with risk firmly tilted to the upside. Under the baseline scenario, headline inflation is expected to reach around 5.5% in 2026, higher than the bank's 2 to 5% inflation target range. But it could go back to within target during 2027 as the impact of the oil shock dissipates. The MPC remains vigilant to the possibility that renewed increases in global energy and freight costs may gradually pass through into domestic prices over the coming quarters, and that inflation expectations could become unanchored. Turning to money market developments, the bank maintained open market operations to remove excess liquidity from the system. Since the last MPC meeting, the bank has issued BOM bills for an aggregate amount of 47.5 billion rupees in the 90-day and 180-day tenors, as well as 2-year BOM notes for an aggregate amount of 6 billion rupees. The bank also continued to operate the overnight deposit facility, which allows banks to place their surplus liquidity at the end of the day. On average, an amount of 28.4 billion rupees has been placed on overnight deposit with the bank at the rate of 3.0% since the last MPC meeting. The amount of outstanding BOM securities issued for liquidity management purposes, excluding overnight deposits, stood at 91.6 billion rupees as of 12 May 2026. The issue of BOM bills, together with the maintenance of the overnight deposit facility, have contained the rupee excess reserves at a daily average of 2.4 billion rupees. Yields on the 91-day, 182 days, and 364 days bills were at 3.93, 4.12, and 4.41% respectively as of 14th May 2026. The overnight interbank rate evolved close to the lower bound of the interest rate corridor at 3.25% amid a slowdown in interbank market activity. The MPC also reviewed developments in the domestic foreign market and external balances. Despite rising external risks, the domestic FX market functioned smoothly and reserves stayed strong, offering buffer against external shock and heightened volatility. Turnover on the FX market amounted to $5.5 billion since the beginning of 2026. That is an increase of around $196 million compared to the same period in 2025. Most of banks' FX purchasers were from the financial and accommodation sectors, while banks' sales were to the wholesale and retail trade sector. The bank's intervention on the domestic FX market between January and mid-May 2026 amounted to $40 million compared to $50 million during the corresponding period of 2025. The rupee reflected domestic and supply conditions as well as international currency movements. Given particularly volatile international markets, the rupee exchange rate depreciated by 2.9% against the US dollar, 1.0% against the euro, and 1.5% against the pound sterling since the February MPC meeting. The current account deficit, which was estimated at 7.1% of GDP in 2025, is projected to narrow to 6.7% of GDP in 2026, mainly on account of higher expected surplus in the primary income account. The goods account deficit is forecast to widen further, driven by higher oil prices and freight costs, although this could be partly offset by higher bunkering activity. The gross international reserves, official international reserves, GOIR, of the country stood at $9.8 billion as at end of April 2026, representing 13.6 months of imports if we exclude GBC service imports, and 10 months of imports if we include GBC service imports. In terms of the risk to the outlook, looking ahead, we need to remain vigilant in a context of prevailing uncertainties. The economic outlook will be shaped by the evolution of geopolitical tensions, developments in global energy markets, the duration of disruptions to shipping and supply chains, and the policy responses of major central banks. A prolonged escalation of the conflict in the Middle East could weaken global growth prospects further, while simultaneously exerting renewed pressure on inflation worldwide. A more severe deterioration in global risk sentiment could also trigger tighter financial conditions, capital flow reversals, and exchange rate pressures in emerging markets, including Mauritius. As a small and highly open economy, Mauritius remains particularly exposed to imported inflation through fuel prices, transportation costs, food imports, and exchange rate developments. With inflation expectations recognized as a critical anchor of macroeconomic stability, there is a heightened risk that persistent increases in energy and import prices could broaden into more generalized inflationary pressures if policy action is delayed. According to the bank's alternative scenarios, which involve prolonged conflicts and higher oil and commodity prices, these developments would materially alter the balance of risk to the inflation outlook, reduce households' purchasing power, and put additional pressure on the rupee exchange rate. At the same time, these alternative scenarios show that while several sectors would continue to demonstrate resilience, overall economic activity would moderate further. Downside risk to the growth outlook have increased. The MPC assessed that the risk to the inflation outlook outweighed the risk to the growth outlook, and that failure to respond to rising inflationary risk at this stage could ultimately prove more costly for the economy. allowing inflationary pressures to become entrenched could undermine purchasing power, weaken investor confidence, distort economic decision-making, and ultimately necessitate more aggressive policy tightening in future. To conclude, there was consensus within the MPC that raising the key rate by 25 basis points was best aligned with the bank's mandate of price stability and orderly and balanced economic development. The MPC viewed that a timely and measured adjustment would help maintain monetary credibility and reinforce the central bank's commitments to price stability while contributing to preserving confidence among households, businesses, and investors. It further assessed that domestic economic conditions remain sufficiently resilient to absorb a moderate increase in interest rates. Financing conditions are expected to continue supporting productive economic activity, while the banking sector remains liquid, sound, and well capitalized overall. The MPC wishes to emphasize that the decision to raise rates is a calibrated response intended to reinforce price stability at a time of elevated external risk, while maintaining support for sustainable economic growth over the medium term. The MPC will continue to closely monitor the evolution of the Middle East conflict and its spillovers to global energy markets, supply chains, financial conditions, and domestic price dynamics. Monetary policy decisions will remain data-driven and will continue to be guided by evolving inflation dynamics, domestic economic conditions, financial market developments, and the external environment. The MPC stands ready to meet in between its regular meetings and take appropriate actions to achieve its dual mandate of maintaining price stability and promoting orderly and balanced economic development. Thank you for your attention. With that, I shall be pleased to take any questions you may have on monetary policy.
Donc la situation continue à être affectée par ce qui se passe au Moyen-Orient.
Tout à fait. Donc, nous sommes une petite économie ouverte et donc les développements économiques sont largement tributaires de ce qui se passe à l'extérieur. Et comme nous l'avons constaté, il y a eu une répercussion immédiate sur les prix à l'importation qui se sont traduits par des augmentations de prix au niveau domestique et nous pensons qu'il y aura des effets de second tour assez importants.
Vous avez évalué l'impact sur les individus qui ont des prêts à vendre et les entrepreneurs parce que le coût de crédit va augmenter avec l'augmentation du kilowatts.
Absolument. Donc il a fallu, c'était une décision qui a pris en considération un certain nombre de facteurs. Donc déjà les pressions inflationnistes, le fait que nos projections sont que l'inflation va augmenter pendant un certain temps et qu'il faut maîtriser cette inflation. Par ailleurs, nous avons tenu compte du fait qu'une inflation non maîtrisée aurait aussi un impact sur les individus au niveau déjà du pouvoir d'achat, du taux de rendement réel sur leurs dépôts qui serait érodé par le taux d'inflation. Nous avons aussi tenu compte dans nos discussions du taux d'endettement des ménages et j'ai évoqué un peu plus tôt les tests de résistance que nous avons menés dans notre analyse sur la stabilité financière. Et ces tests de résistance ont conclu que le système bancaire dans son ensemble demeure pour l'instant bien capitalisé, donc il y a une capitalisation adéquate, que le système bancaire demeure résilient. C'est vrai qu'une augmentation du taux directeur de 25 points de base va se répercuter à la fois sur les taux à l'emprunt, mais devrait aussi se répercuter sur les taux qui sont perçus sur l'épargne des individus et ménages.
Is it a signal that by hiking the rates by 25 basis points, is it a signal that the central bank and the MPC stand ready to act by increasing the rates further in meetings in August or November, or any meeting that might be necessary due to the situation prevailing in the Middle East?
So I think the hike here marks a rupture with the situation that we had at the last MPC. The war was a turning point. The outbreak of the war in the Middle East was a turning point. And the relatively benign outlook and favorable outlook, I should say, that we described at our February MPC, notwithstanding the risk of the conflict that we had flagged at the time, has been downgraded to a considerably deteriorated scenario with a lower growth outlook, a higher inflation outlook, and considerable upside risk to inflation and downside risk to growth. By hiking the rate, we are focusing on the price stability mandate of the bank, knowing that if we allow inflation expectations to become unanchored, if we allow inflation to become entrenched, this is going to have a deleterious effect on economic growth, on macroeconomic stability, and ultimately on the other part of our mandate, which is to promote orderly and balanced economic development. Now, we are not, with this rate hike, committing to a tightening or signaling that we are embarking on a tightening cycle. The situation, as I mentioned, remains very uncertain. Nobody knows how and when the war will end. And nobody knows the extent of the demand destruction that may or not be forthcoming later as we progress along the year. So monetary policy will have to be nimble. And to borrow, or to paraphrase rather, Christine Lagarde, we will have to be data-driven and decide meeting by meeting. But certainly, in terms of the priorities of the bank, we will focus on our price stability mandate.
Est-ce que les impacts des chocs peuvent pousser à un effet inflationniste? Vous l'avez dit dans votre intervention, les 5,5%, c'est la prévision. Est-ce que ça peut aller plus loin par rapport aux effets dévastateurs du marché du euro noir à l'international?
Alors, les 5,5, ça c'est dans notre scénario de base. Nous avons projeté une inflation moyenne pour 2026 qui pourrait atteindre les 5,5%, mais c'est notre scénario de base. Nous avons deux autres scénarios qui sont un peu plus sévères, où l'hypothèse à la fois sur le prix du baril et la durée du conflit sont plus sévères. Donc, le prix pourrait augmenter plus et le conflit pourrait durer plus longtemps. Et donc, effectivement, ce qui pourrait se passer à ce moment-là, c'est que le taux d'inflation dépasserait les 5,5%. Mais il y a beaucoup d'incertitudes et nous ne savons pas à ce stade. Et c'est la raison justement pour laquelle on a fait des projections sur plusieurs scénarios pour pouvoir se situer un petit peu et avoir une idée de la trajectoire ou des trajectoires possibles du taux d'inflation.
Le ministère des Finances avait projeté, je crois, 6%. Worst case scenario.
Alors, il y a peut-être quelques différences au niveau des hypothèses et ce sont des scénarios qui sont appelés à évoluer en fonction des développements au niveau géopolitique, en fonction du développement. Si vous regardez par exemple l'évolution du cours du baril, c'est vraiment les montagnes russes. Donc là, nous sommes au-delà des $100, ce qui pourrait donner une moyenne dans les 85 $90 sur toute l'année. Mais il y a vraiment une très, très grande marge d'incertitude autour des projections.
At your last MPC on February 11th, you said that the tourism revenue was $2.2 billion in 2025, and there will be sustained growth in 2026. So, in your different analysis, what's the central bank estimates or forecast in terms of baseline forecast for tourism revenue for the year?
So we are estimating that tourism revenue in rupees, in Mauritian rupees, will be very close to what we observed last year. But this is driven more by a price effect, the fact that prices in general are going up. In terms of volume, so the number of tourists, we expect it to be slightly lower compared to what we had observed last year. I think last year we had 1.46 million tourists. We are expecting 1.4 million this year. so slightly down.
Vous avez parlé de la dépréciation de la roupie par rapport de l'or et à l'euro depuis le mois de février. Et qu'en est-il des interventions de la Banque de Maurice sur le marché d'échange par rapport à la fréquence? Quelle sera la marche à suivre?
Donc, pour ce qui est de la dépréciation de la roupie, c'est une tendance qui est assez généralisée, qu'on a observée avec les monnaies de beaucoup d'économies émergentes et en voie de développement. Pour ce qui est des interventions de la Banque de Maurice, comme vous savez, nous avons un régime de change flottant, c'est-à-dire que le taux de change est déterminé par les conditions de marché, à savoir l'offre et la demande. La Banque de Maurice intervient surtout lorsqu'il y a une volatilité excessive dans le marché sur le taux de la roupie, parce que ça pourrait être déstabilisateur et que ça a un impact direct sur la stabilité des prix et aussi la stabilité financière. La Banque de Maurice intervient également lorsqu'il y a des tensions sur le marché des devises, notamment lorsque l'offre est largement insuffisante par rapport à la demande.
Le FMI récemment reconnaît la difficulté économique, la crise économique, mais en même temps préconisait des mesures pour les plus vulnérables. Vous voyez quelles sont les mesures qui peuvent être prises pour les plus vulnérables?
En effet, le FMI, comme nous d'ailleurs, a vraiment tenu à faire souligner l'incertitude qui pèse et la possibilité de différentes trajectoires à travers des scénarios. Et le FMI a préconisé des mesures pour protéger les plus vulnérables à travers surtout des mesures budgétaires ciblées et temporaires. L'instrument de politique de la Banque de Maurice, c'est le taux d'intérêt. C'est un taux qui ne nous permet pas de cibler. Donc c'est un taux qui influence les prix dans l'économie dans sa globalité. Nous n'avons pas un taux directeur ou un taux d'intérêt pour les ménages plus pauvres, plus vulnérables, et un autre taux pour ceux qui ont les moyens de payer. Donc la politique monétaire est moins à même à cibler les ménages, à protéger ceux qui sont plus vulnérables. Mais par contre, en agissant sur la politique monétaire, en s'assurant que l'inflation ne prenne pas une trajectoire qui soit hors de contrôle, c'est un moyen de protéger ceux qui sont plus vulnérables, sachant qu'une inflation élevée a un impact disproportionné sur ceux qui sont les plus vulnérables, sur les ménages à faible revenu.
La Banque de Maurice a publié hier, semaine dernière, un communiqué par rapport à des fausses nouvelles titrées sur le print, money printing de 80 milliards de roupies en 2025. Qu'est-ce que vous avez à réagir comme gouverneur de la Banque de Maurice par rapport à cela? Est-ce qu'il y a une confusion totale par rapport à ce qui a été dit et le rôle de la Banque de Maurice?
Alors, est-ce que je peux revenir sur cette question? C'est une question importante et merci de me donner l'opportunité d'apporter des éclaircissements. Mais est-ce que je peux revenir sur la question après qu'on ait fait le tour des questions sur la politique monétaire?
Would you say that the current inflation pressure that we're witnessing, are they structural or they are temporary?
I think this is a $1 million question. I think you're right that conventional wisdom is that inflation coming from a supply shock, which at the moment this is, central banks typically can look through, knowing that these will not have permanent effects. But in this case, this is a very large shock. Oil prices, I think, are depending on where you start timing, what is your reference point, between 50 and 80% higher than before the war. And therefore, this is a shock that has the potential to be very damaging to the economy. Given that the conflict has lasted far beyond what was initially expected, the duration of the shock is also very persistent. And the issue with it is that it can start morphing into a demand shock as well. So as the conflict draws on, as the supply shock becomes more severe, you can start seeing an effect on aggregate demand. So it is not at the moment a temporary shock. Nobody can say if it's going to be a permanent shock, but it is certainly looking as though it's going to be long-lasting.
One question regarding to foreign currency, and based on what has been stated by different ministries and by the STC. So is the Banque of Maurice providing direct FX lines to STC and the CB, or is it to the commercial banks to provide the FX?
No, the Banque of Maurice is not, and I speak under the correction of the first Deputy Governor, the Banque of Maurice is not providing direct FX lines to the STC and the CB, as was the case in the past, I believe.
Vous parlez de résilience économique. Qu'est-ce qui caractérise cette résilience? Donc, quels sont les points forts de notre économie, à votre avis?
Alors, les points forts sont déjà que nous avons une économie qui est bien diversifiée. Donc, nous ne sommes pas dépendants d'un seul secteur uniquement, le tourisme. Nous avons le secteur des services financiers qui se porte plutôt bien. Et nous nous attendons à une belle performance du secteur des services financiers. Il y a aussi certains points forts de Maurice, donc la stabilité, on va dire stabilité économique, mais aussi politique, la position géographique, de par sa position géographique aussi. Donc ce sont autant de facteurs qui font que l'économie est résiliente. Et bien sûr, cette résilience va être testée parce que, comme je le disais plus tôt, c'est un choc qui est très significatif et qui pourrait durer pendant un certain bout de temps. Any other questions on monetary policy? D'autres questions sur la politique monétaire?
I have one final question.
Okay.
So you said that the MPC stands ready to meet in between. So is there kind of a trigger? What would trigger a meeting? Lead inflation, similar inflation?
So the trigger really would be the data. We are monitoring very closely developments as far as inflation is concerned. We are monitoring developments on the foreign exchange market, for example. We are watching very closely as well what other central banks are doing, because the actions of central banks will affect the interest rate differential vis-à-vis the rupee, and so will also exert pressure, depending on the actions of these central banks, may exert pressure on the rupee exchange rate. So the trigger would be any data that suggests that we need to act to preserve price stability and financial stability. Or if growth were to slow down significantly, that would also be a reason to convene and discuss the best course of action. So then let me turn to your question concerning the news about the allegations about money printing last week and the communique that the bank put out. So as central bank governor, and out of respect for the chair that I occupy and the institution that I serve, I choose to exercise restraint in my communication. With respect to the statement about money printing, I will say that I stand by the communique that the bank put out. I think we ought to call a spade a spade. And in this case, the allegations of money printing objectively qualify as fake news. And this has nothing to do with who made the claim. It could have been you making the claim, it would still be false. It will still, and if you were spreading it, it would still be fake news. Why does this matter? It matters because there is very serious research showing that fake news can affect business cycles. So in other words, fake news can be destabilizing for economies. In this respect, I would encourage you to check out research by Professors Tiziana Senza and Fabrice Collat from the Toulouse School of Economics, for example. They have some research. Now, The allegations of money printing, in my view, are very serious. Why? Because they directly affect the perceptions of independence of the central bank and are damaging both for the reputation of the Bank of Mauritius and of Mauritius as an international financial center. The Bank of Mauritius has been through a tumultuous period last year, to say the least, and when I came in, I made it a priority to rebuild the trust and credibility of the institution. This is something that many, not all, but many of the bank staff are working towards one day at a time by taking decisions that are aligned with our mandate and the guidelines that we put out. Let me be clear about one thing. As a central bank advocating for autonomy, independence, we are aware that independence and accountability are two sides of the same coin. And so we are committed to transparency. We publish our data regularly on the 20th of every month. And so the verification of the data would show that there was no money printing to the tune of 83 billion rupees, as was alleged. In a communiqué, I cannot detail the explanation, but I believe that the communications unit of the bank did send out to journalists a table explaining how the 83 billion came about and clarifying that this was, in fact, the bulk of it was driven by credit creation by banks. And thus, let me make 3 points. So, to be clear, the central bank did not print or transfer money to the government in 2025. So we issued this clarification, we shared it with a lot of the media outlets. We're happy to spend some time going over the numbers with you if necessary to clarify. I know that some news media published it. Second, and we know this from the one and only time that the central bank printed money to fund the government in 2020, that such a transaction would need to be reflected in the central bank survey. It would show up in the numbers. It would also show up in the central bank audited balance sheet. Both have been published in a timely manner. And subsequently, there was a debate as to whether there is excess liquidity. So the debate shifted from the $83 billion of money printing to excess liquidity. I think the bank has been transparent about excess liquidity. In fact, at every MPC, just like today, we report on structural excess liquidity, the instruments that we use to mop up excess liquidity, and we also publish data. And third, let me conclude with this. I would like to thank all of those who have opined on the matter for their feedback. Every perspective has been valuable, even the ones laced with vitriol and misogyny. This, as folks like to say in the United States, is a teachable moment, and thus at the bank we have decided to devote considerable time to explaining concepts such as money supply, money creation, and inflation in a forthcoming series of financial literacy videos, which we have been planning to launch for some time. So all I can say is stay tuned. We will come back on these issues in a series of financial literacy videos. Thank you.
En même temps, il y a beaucoup de questions liées à la supervision de la banque. Qu'est-ce qu'on peut faire pour empêcher que 25 milliards de roupies volatilité à votre avis également?
Alors, je vais d'abord préciser qu'il y avait 25 milliards et on avait cité 4 banques, dont la Banque de développement. La Banque de développement n'est pas supervisée par la Banque de Maurice. Je tiens déjà à préciser cela. Maintenant, au niveau de la supervision, je vais vous répondre en utilisant une analogie. Parce qu'il y a beaucoup de critiques qui circulent. Encore une fois, je l'ai dit, la critique, aucune banque centrale ne doit penser qu'elle est au-delà de la critique. Certaines fois, les critiques sont justifiées, mais il y a des critiques qui vont trop loin. Donc, je vais vous répondre en utilisant une analogie. Ce sera bien sûr un peu une exagération, mais j'espère que vous comprendrez un peu le sens dans lequel je vais. Mon analogie est la suivante. Dans tous les pays, dont le nôtre, Nous avons un code de la route, nous avons certaines lois qui régissent comment on doit se comporter lorsqu'on conduit une voiture, une moto, un autobus, ce que vous voulez. Et nous avons des agences pour vraiment mettre en pratique ces lois, pour s'assurer que ces lois soient bien respectées. Pourtant, on a des accidents routiers de part et d'autre. Le plus souvent, ces accidents ont lieu parce que les automobilistes sont distraits, ils sont en train de faire de l'excès de vitesse, peut-être qu'ils sont en train de conduire sous l'influence de quelque chose, ou peut-être qu'il y a une défaillance mécanique, des conditions de conduite dangereuses, du brouillard, que sais-je. La réponse après chaque accident, ce n'est pas de blâmer la police ou de dire que c'est toute la force policière qui doit être envoyée. Donc c'est un peu là que j'essaie de cadrer le débat. On peut dire par exemple, il faudrait qu'il y ait une présence policière renforcée, qu'il faudrait des amendes plus sévères, qu'il faudrait avoir plus d'informations pour pouvoir mieux cibler les interventions. Mais de manière générale et ultimement, les accidents sont causés par les automobilistes et très rarement par le défaut de la force policière de faire son travail. Alors ce que j'essaie de dire ici, c'est que oui, on a parlé d'une supervision qui n'a peut-être pas été à la hauteur, mais je crois qu'on a aussi parlé du fait que les banques ont des conseils qui sont tenus de prendre certaines décisions. J'ajouterais aussi que les banques ont des comités pour évaluer le crédit, des comités pour l'audit, pour le risque. Ça, ce sont les premières lignes de défense. La Banque de Maurice supervise et émet des réglementations pour plusieurs institutions dans le secteur bancaire, dans le secteur financier, pas la DBM, comme la Banque de développement. Elle émet des directives, elle impose parfois sur certaines mesures macro-prudentielles, mais elle ne va pas faire du micromanagement sur le cahier de prêts ou des décisions des institutions qui sont sous sa supervision. En fait, il n'y a aucune institution de régulation ou de supervision qui fait cela. Et par ailleurs, il n'y a pas de régulation ou supervision en temps réel. Donc tout se fait ex post. Bien souvent, lorsque le régulateur arrive, c'est que la transaction, les micmacs, ils ont déjà eu lieu. Alors, nonobstant, cela ne veut pas dire qu'on va se contenter de cela. Il y a, avec les nouvelles technologies, avec les nouvelles directives qui sont émises par les agences internationales, des standards de régulation et de supervision qui sont amenés à évoluer, qui sont amenés à être améliorés et qui permettront une meilleure surveillance. Une surveillance qui sera un peu plus proactive plutôt que réactive. Alors, il y a une marge de manœuvre pour améliorer les choses et la Banque de Maurice a bien l'intention, en tout cas moi j'ai bien l'intention que la Banque de Maurice s'approprie ces outils pour améliorer la surveillance. Mais cela ne remplacera pas un système de contrôle, le rôle du conseil dans les institutions concernées.
Deuxième question. La famille a fait pratiquement vos éloges sur l'entreprise d'ailleurs, en disant qu'il était dans la bonne voie concernant MIC. Donc, où allons-nous?
Alors, nous allons dans le sens d'un désinvestissement. Nous avançons peut-être moins lentement que je l'aurais souhaité. C'est vrai que quand vous regardez de dehors, la perspective, que vous êtes dehors et que vous regardez, la perspective est très différente. Et c'est une leçon d'humilité que moi-même j'ai reçue, puisque l'idée c'était vraiment, il faudrait que la banque se désinvestisse le plus tôt possible. Lorsqu'on regarde de plus près, lorsqu'on va dans le détail, là on fait face, on se heurte à beaucoup de contraintes légales, beaucoup des contraintes liées au contrat que la MIC a signé. Et là on se rend compte que c'est plus compliqué en pratique. Mais nous progressons dans cette voie et pour nous, il est important, pour la Banque de Maurice, il est important de mettre derrière nous cet héritage lourd qui découle de l'utilisation de la planche à billets de la création monétaire en 2020-2021. Merci.
Vous avez pas